everyone. Thank you for joining us. My name is Nico Ascari and I am the digital markets correspondent at the Financial Times. Welcome to the second part of this session on the great global innovation race, where we'll be looking at global developments across innovation and regulation. And I'm joined here by Faryar Shirzad, Chief Policy Officer at Coinbase, and Simon O'Brien, Executive Director of Markets, Financial Services Regulatory Authority at Abu Dhabi Global Markets. We are also, should be also joined by Peter Kerstens. There we are. Peter Kerstens, Advisor in Technological Innovation and Cybersecurity at the European Commission, who is joining us virtually. Before we get started, a reminder that you can submit your questions online using Slido if you just scan the little QR code, and I will put them to the panel. Well, welcome. We're here to discuss the global innovation race, how lawmakers across the world are creating regulations for companies to remain competitive and innovative while also protecting customers, both at the retail and at the institutional level. And I'm interested, Faryar, in when you look across all of the regions in which Coinbase operates, where do you see as promoting the most innovation and competition, and where do you see as lacking in that regard?
Well, there's two global conversations on regulation. There's the US conversation, which is focused on this security commodity split, and then there's the rest of the world, which understands that, as we talked about on the last panel, much of the financial regulations were built on the pre-internet era, pre-digital era, and assumed the existence of a series of intermediaries. So you have economies like the European Union, the UK, the UAE, the Abu Dhabi authorities, and others, France, Germany, Japan, Hong Kong, UK, Canada, Brazil, it's a very long list of economies around the world, have understood that there's something about tokenized market and the tokenization of financial instruments that's fascinating, both with regard to traditional crypto tokens, but also the ability to tokenize traditional financial assets. But to do that, that requires a bit of an evolution in terms of how the financial regulations work. The regulations that currently assume the existence of a series of intermediaries need to really give way to regulations that are outcomes-oriented, both in terms of facilitating whatever the financial activity is, but also outcomes-oriented in the sense that they ensure that customer protection is preeminent, not assuming a particular business model or a particular market structure. And so the economies that have been in the front end of that are the ones that are on our panel now. The Europeans, with Peter playing a significant role, put together this market and crypto assets regulation, which is worth a lot of discussion and focus. And Simon and the authorities in Abu Dhabi and the UAE generally have done really cutting edge regulation. Now, they both moved as first movers in the space, but you have other jurisdictions that are moving very fast on their heels, and you'll have this kind of virtuous cycle of updates and innovation that we expect to happen around the world. And much of this will happen as we in the United States continue to struggle with the security commodity issue, largely because we're one of the only economies, one of two or three in the world, that has a bifurcated market regulatory system. We have a commodity regulator, we have a security regulator. This issue of commodity security is really a jurisdictional issue rather than a customer protection issue. And Simon and Peter can talk more about how they approach that.
Well, Simon, I'm interested. I mean, Abu Dhabi has really is a crypto hub, and you're really promoting that. Why is that? What do you see in the industry and the companies that you work with that perhaps other regulators, the US, for example, the SEC, doesn't see in the same way that you do?
I think it's a good question to ask, and for us it's been a number of years we've been working in the space. So we first started looking at this in 2017, 2018, not as early as many of the key firms like Coinbase and others have been in the industry, but relatively early given what we've now seen in terms of the regulatory environment. At the time, there wasn't a lot to look at. So when we looked at it, taking on the points you've just raised around the tokens themselves, was also the activities. I mean, if we looked at what was occurring, the exchanges or brokers or custodians and others, they weren't being regulated for those activities either. So our first view back in those early years was to look at and say, if it looked like an exchange, and how do you apply processes like settlement and recording of a transaction, the disclosure of those, the orderly construction of an order book, for example, in the market space, the application of market abuse requirements and those sorts of things as well. If you project that to where we're at now, it means then much of the industry is seen Abu Dhabi and other jurisdictions as a place to conduct activity because we recognise their activities fitting within in our regime. That wasn't the case. So the early jurisdictions were focused, rightly so, on money laundering and terrorism financing. You saw many jurisdictions construct frameworks to effectively build payments type licenses, but they're not really regulating the flow of funds inside an exchange or with inside a custodian and others as well. And we very much focused on that. So what it means when a firm comes to talk to a regulator like us, they can explain that they are a broker-dealer in that parlance, or a custodian, or an exchange, or a combination of those. You've seen Bevan Howard, Alan spoke very clearly earlier this morning about, as a fund manager and asset manager, what they're looking to do as well. So I think that clarity is important. But there are things since then that we didn't see in 2017-18. Stablecoins, staking, all those sorts of things have only really occurred since then. What we then have to do is make sure that we don't go and quickly make considerable changes. We have to make sure we engage and understand what the industry is doing, protect it as needed, but really from where we sit, fit the right categories of regulation to the activities as needed and provide that clarity.
Yeah, it's very interesting. And I guess it's something, Peter, that you also would have thought about a lot when it came to creating and writing up MiCA. Can you talk us through how you balance the need to allow companies to innovate while also having to think about customers and retail and institutional asset managers, and how to balance the protections of them?
Yeah, sure. The work on MiCA really started quite a long time ago, 2018, when we saw huge opportunities in the ability to raise funds through ICOs. And we saw there was a real interest among Europeans to trade crypto assets. And we said, look, there's fairly disorganized, there's all kinds of problems in this market, but the technology itself and the markets offer real opportunities. And we wanted to seize these for the European Union. And that's why we did MiCA, which regulates and which covers the issuance of crypto assets and the disclosures that are necessary if you issue crypto assets, but also if you issue stable coins, what you have to do. But then more importantly for the ecosystem is that MiCA also regulates what we call crypto asset service providers, custodians, brokers, exchanges, advisors, portfolio managers, and so on, so that they can operate under a clear legal system within the EU, but also that European consumers and investors can benefit from the opportunities this market offers in a clear framework and are not pushed or offshore, that they can do that, there's no motivation, no need for them to engage in this business in very exotic jurisdictions, because the purpose of MiCA is to onshore this activity in a regulated way within the European Union.
I mean, just on that point, why is that so important? I mean, when we look at the SEC and the way that they're approaching the crypto industry, an argument is made that this is just going to push US crypto activity offshore. And I mean, they don't seem to mind, at least from where I'm sitting. But for you, when you think about crypto in the EU, why is it important to have that all onshore and bring it inside?
Because we saw Europeans engaging in this market, European consumers putting money into all kinds of cryptos, accessing trading venues and brokers which were not located in the EU, and there was no real protection for them. There was no legal certainty. And rather than prohibiting this activity, which some people suggested that we should just prohibit it, we said, no, we should not prohibit it, because that's not going to stop Europeans from engaging with crypto. We should create a framework that allows them to do it in an orderly way and in a regulated way.
I'm interested in what you think of the European approach, and we've got a question from the audience that says, what are some things that legislators around the globe are getting right, and how can they make further progress?
Well, I mean, what the Europeans did right is to take a pan-European approach, create a single rule book, 450 million consumers, 27 member states, and provide a system under which anybody that wants to come into that market has the incentives to undertake all the complexities of what the Europeans demand, but as a result of that, has the benefit of being able to serve a very large market in quite an efficient way. I think so. That broad conceptual approach was a hugely critical and important thing that the Europeans did. The rules around virtual asset service providers, so crypto intermediaries, is quite good too. There are elements of it that we had some differences with, and Peter and I talked about extensively in the last throes of the MiCA process. I would say the area that they didn't get quite right has to do with stablecoins. There's a struggle within Europe between the European Central Bank and the Commission and other parts of the decision-making processes in Europe over kind of how comfortable they are about stablecoins. So in our perspective, it's probably an excessively risk-sensitive approach in the sense that there's pretty heavy capital requirements. There are caps on how many you can issue. I think with time, those will get addressed, and it doesn't ultimately detract from the strength of what MiCA was able to do. And so it was a pretty impressive undertaking.
Peter, what do you make about that? Not to flesh up old arguments that you've had, but around stablecoins, your approach around that?
Well, I wouldn't disagree with Faryar on also the points which he says are sort of not necessarily strengths of MiCA. It is, of course, the result of a democratic process. The European Commission and my team, we proposed it. We designed MiCA and proposed it. And the provisions which Faryar refers to were not in the Commission's proposal. But this is what the member states of the European Union and the European Parliament wanted. And ultimately, in a democratic society, it is the legislator that decides. And this is testimony to the fact that not everyone is convinced at this stage about the fact that crypto is more opportunity than risk. I am convinced that it's more opportunity than risk, but the majority view is that it's more risk than opportunity. And that, I think, is also reflected in some of the elements of MiCA.
Simon, how do you think about that in Abu Dhabi?
I think it's the right debate to have, balancing risk and how you mitigate those risks. I think the jurisdictions that focus on at least trying to identify those risks at any point in time are doing the right thing, but still need to be cognizant of the fact that that's at that point in time. As I mentioned before, the issues of stablecoins wasn't really around when we first started thinking about this, and other aspects as well. DeFi wasn't a term that was thought of, and other aspects as well. So I think where we probably tactically took a different view was to construct the framework, put it into our legislation at a very high level, then built some rules around that, but the majority of the thinking actually went into what we call guidance. And that's a little bit different. So a risk of a regulator sometimes to hard code its thinking into it, and it may get it wrong, it may miss what the industry needs. And so therefore you might have a principle that says a custodian should be regulated as a custodian, allow for custodian activity to be caught, but then underneath it say this is what we mean in terms of wallets. And we get questions, for example, all the time around, and I'm pivoting here on how much should go into a hot wallet versus cold wallet. Our view is that's a principle that should be determined by the firm. We know many jurisdictions will hard code it, the number should be X, Y, Z. We're still struggling with that 5 years later, so we're still trying to find ways to build in to capture all the activity, not get ahead of it. So sometimes regulators can be criticised by designing a framework in an ivory tower. So therefore it's important, I'm sure Peter and other regulators around the room have got to work very closely with industry in this industry in particular to be able to make sure we know what they're doing, how they do it, and how it fits in with those activities. But it really means a consistent, long, close engagement. Our bigger concern, looking at what some other regulators have done, is just legislate. So what they do is put out a framework. We think we've covered all the risks, but don't go away and build out proper teams, and particularly on the technology side and other aspects as well. It means the ability of a regulator to engage sometimes daily on the key activities of a firm. Just we miss it, and therefore that's something we've got to very much focus on, but therefore recognise there's risks. Our view is there are risks, they can be mitigated or should be mitigated, but working closely with the firm to make sure we're comfortable the firm's mitigating them as well.
I'm interested in that, in those struggles that you're still having now. What are you still grappling with? I mean, you said obviously stablecoins, DeFi wasn't a thing 5 years ago. What are you dealing with now?
changes of custodial technologies is one. Changes around the pivoting and the sophistication of the models. If you go back a few years ago, the models were very much based around trading of spot virtual assets within an exchange and some custody activities. If you look at it now, if you look at the recent IOSCO publication, it was very clear in saying, as regulators, as a global regulatory community, we have to focus on effectively group structures, doing everything from investment banking, funds management, asset management, custody, broking, staking, exchanges, etc. Then you move into derivatives and others as well. That's actually really, really interesting and exciting, but to be able to look at it and say, as a regulator, we know the answer to that in terms of that activity is difficult. So in that sense, we believe the days of, and given this is an institutional type of summit, the days of the retail startup, I have a dream, I'm going to launch a crypto exchange, I think those days have gone. I think what we're seeing also is the players that are managing to exist and operate now are then pushing in and trying to determine how they're going to be able to develop their unique selling point to make sure that parties like all these groups in the room will say that's where I want to go. We'll leave that to industry. Our job is to make sure it's clear how they do it.
But one thing I'd say is the issues assignment flags are healthy for regulators. So we obviously run a very large and growing global business, and with the passage of MiCA, we're in the process of looking at where we would want to consolidate and potentially headquarter our MiCA entity and run our European business out of a single entity. And what that involves is talking to national, what they call national competent authorities in the member states, partly to see kind of their disposition towards crypto, but really just to see the degree to which they want to have a dialogue with industry, because there are a lot of hard issues and innovative issues that emerge, particularly given how dynamic digital technology is. And so if you have a regulator like Simon who wants to have a dialogue with industry, go through the issues, he'll land somewhere, we'll like some of where he lands, we won't like others of it, but there's a dialogue and a process around it. That's a lot, that's about all you can ask for as an industry. And that capacity and that curiosity is critical. I think the other thing and we talked to a lot of governments around the world. In fact, we created a framework for global regulation that we've shared with most of the major markets over the last couple of years, because they've always appreciated the degree to which we've been able to give them some, at least our thoughts in terms of how they think about it, that you really need to start with the regulation of the intermediaries. That's the obvious place to start. What happens sometimes is you hear people say, well, what about NFTs? And what about DeFi? And what about this? What about that? There's a million permutation of crypto technology that we'll have to confront at some point. But the thing on the table at the moment, the obvious one, is the intermediary. We embrace that, that we are the first generation of where the regulation should apply. And I think there's a lot of really interesting things that can be done there.
I mean, just on your point about looking at Europe, where are you weighing up? You said you're looking at sort of headquartering somewhere. Where are you considering?
We've narrowed it down to 27.
We've got a question here from the audience about where Hong Kong and China fit into the picture with some of these Hong Kong's recent announcements on regulation. Peter, how closely do you look at what Hong Kong and China are doing around crypto? And what do you make of their progress, their developments there?
We, of course, look at other jurisdictions for what I would call inspiration and models. But ultimately, MiCA is for the European market. So we regulated that for the European context, European investors, and companies that want to do business in Europe. So we see that certain jurisdictions take similar choices, other jurisdictions take a different choice. For example, China, there was a lot of crypto activity initially, then there were quite a lot of bans, and they opened up a bit with more centralized control again. And we reviewed these models, but they weren't necessarily the right approaches for the EU. Now, that said, there was certainly a body of opinion also in the European Union that felt that the best thing to do with crypto was to ban it all. But that luckily was not the majority view.
Faryar, on the Asian countries and their approach to crypto, what do you think about what they're doing, especially Hong Kong?
Well, Hong Kong's interesting because they essentially came out of nowhere on crypto And essentially, when they kind of lifted the lockdown, essentially at the turn of the new year, they moved quickly to issue a consultation, essentially asking for public input about how to develop a regulatory framework around it. A number of us, myself included, have worked a lot with the Hong Kong SFC and the regulators there. And it was clear there was a very significant political commitment from the financial secretary as well as the regulators to get this done quickly. There are elements of the consultation we liked, there are elements of it we thought they needed to revisit. But what then ended up happening is that they closed the consultation and then within days or weeks issued final rules. So what has happened is that Hong Kong has moved at lightning speed to become a home for crypto innovation. You saw your newspaper reported about a week ago that the HKMA is pressing Hong Kong banks to bank the crypto sector, which is different than what you're seeing in some other places. So there's a concerted whole of government approach, clearly very much supported, I imagine, by the mainland authorities for Hong Kong to move aggressively to become a magnet, particularly as there's some uncertainty in some jurisdictions about the treatment of crypto. Hong Kong very much wants to be positioned to be a place where people could potentially go.
On the point around the political push there, coming back here, there is a difference between the regulatory approach and some politicians' approach here when it comes to crypto, how they think about it and how they think it should be regulated. How do you navigate that and what do you think about that? Because there are a lot of different branches with a lot of different thoughts.
In the US?
In the US, right. Yeah.
Well, on a matter like how we adopt a new technology, this is ultimately an issue of national strategy. So we talked about the national security implications and the economic implications. This is exactly the kind of thing that the policymakers should grapple with. A lot of times you'll hear people in crypto world talking about lamenting the fact that the regulators don't get it, that there's innovative potential, economic potential, jobs potential, national security potential. And I say that all the time, but in a way it's a bit unfair to the regulators. If you're a regulator, and I was a regulator of sorts in my stint in government, you're paid essentially to, Simon, forgive me, to prevent car crashes. You're not paid to grow the economy, promote innovation, and make people's lives better. You're simply there to prevent a bad thing from happening. And if that bad thing that doesn't happen, you've done well, and if good things happen, you don't get credit for it. Now, people like Simon think much more broadly than that, fortunately. But it requires the politicians to come in and say, we have a vision, we get that it's different, we're committed politically to get this outcome, and then they give that mandate to the regulators to figure out the rules without political parameters. That's a healthy dynamic. Congress moving ahead and making those decisions in the United States is a very healthy thing. Just like the UK government stepping up and saying, we want to be a crypto center, telling the FCA, the Bank of England, let's figure the rules out. Europeans, Peter and others at the decision-making level, doing that and then essentially handing that out to ESMA and the authorities. That model, top-down, is the healthy model, and we're seeing that in more and more places around the world, and hopefully in the US.
I mean, just in the US, Brian mentioned it earlier about 2024 and how that could change the landscape. How are you thinking about that sort of political regulatory approach going forward?
In the US?
In the US, yeah.
It's hard for American policymakers not to pay attention to what's happening in the world, and the China example is particularly going to be a salient one. So Beijing announced about 4 weeks ago the formation that they were funding by, I forget how much money, $20, $30 million, a development of a Web3 innovation hub in Beijing. I think you actually, the FT or Bloomberg, somebody reported that there were like 44 provinces and municipalities in China that have now announced the development of Web3 hubs. Now, this idea, the world is moving, and for American officials in particular who are watching all the time to see who's winning the innovation race, to see Hong Kong move at lightning speed to become the home for global crypto, and China moving aggressively to adopt the next stage of the innovation of the internet is something that's going to land on US policymakers. It's happening slowly and surely, but I have no doubt that we'll get good rules at some point, if not this Congress, then next Congress. And I think the election will, and you're already seeing among the presidential candidates, you've seen a number of the presidential candidates who've already announced are strongly pro-crypto. Robert Kennedy Jr., Mayor Suarez, a number of the other Republicans that have stepped in are very pro-crypto. Crypto is becoming an issue in the American politics, and the trend line is unambiguously in the adoption side. There might be a generational dimension to it, and that's ultimately going to affect politics and policy in the United States.
I think that's an optimistic way to end this panel. Thank you all for joining us. Thank you, Peter, for joining us virtually. We break for lunch now, so please head out, enjoy it downstairs in the hall, and we'll be back at 1:30. So thank you.